Well, good afternoon. Good afternoon, and welcome to another Webinar Wednesday hosted by the Cal State Bakersfield Small Business Development Center. Good afternoon. I'm your SBDC host and director, Kelly Bearden, and we're going to be talking today about Opportunity Zones version 2.0, a little bit about Opportunity Zones version 1.0, and a lot of great ways to fund businesses and a lot of exciting things that are going to be happening with this new great tool that's going to be available in the near future. Thank you all for allowing us to be here today on April 22nd, 2026. And today it's going to be about the opportunity. So we're going to be talking about opportunities and opportunity zones from distant past to near future to opportunities that are coming up. And I think you that have been on the webinar before, I kind of like the word opportunity because I think there's so many out there. So here is another great opportunity to talk about opportunity with our opportunity zones. So we will jump into a few of our regular columns. We'll jump into our capital quarter and kind of look at opportunity zones, some examples of how they've worked in the past, our abbreviated other columns on economic corner, and also our AI and question mark. We're going to just abbreviate those this week and focus almost entirely on the subject matter today. Community calendar highlights might have one or two of those, but a few things, not too many things going on in the community right now. And we will take your questions after today's live presentation. So go to the Q&A box or go to the chat. Our resources from today will be all located in the chat. Maureen Busher-Dang, our Webinar Wednesday executive producer, will be stacking the chat box with a lot of different information and resources that we discussed today. And hey, I changed my mind. If originally I said no poll today, and then all of a sudden it was like, nah, we got to have a poll. So let's have a couple of poll questions. And we're going to talk about opportunity zones today. So our poll questions are going to be about opportunity zones and funding small businesses. So our first poll is going to be this one is, have you heard of opportunity zones before today? Yes, you're very familiar. You're somewhat familiar. You've heard of it, but not sure how it works, or no, opportunity zones are new to you. So first one, a little bit of market research for not only our distinguished special guest who'll be introduced briefly, but also myself. We want to know how much you've heard about opportunity zones before today. So you're either familiar, you're somewhat familiar, you've heard of it, or no, it's new to you. And we do have 66% of you that are participating, kind of a round number, 2/3 exactly. We're going to go ahead and in this particular poll and share the results with you. With 72% reporting, we see that it's a tie. We have 31% of you that have heard of it, but not sure how it works. So you'll get a good dose of that today. And also know it's new to you. So for 62% of you, it's pretty much going to be new to you. We have 23% of you that are familiar with it and 15% somewhat familiar. So thank you for going into poll question number one. And let's launch poll question number two, which is, what interests you most about opportunity zones? Is it potentially having a lower cost of capital? Is it getting your project funded? Is it revitalizing a location? Maybe you're on the investor side of things, so you're looking at the tax benefits, or you're looking at maybe having a project as an entrepreneur and you have access to investors. Okay, question number two on Webinar Wednesday 377. And it's, what interests you about opportunity zones? Is it lower capital costs, getting your project funded, revitalizing a location, tax benefits, or access to investors? So you might have noticed on this is multiple choice. So you can click on more than one particular answer. So if you have more than one answer, I'd like to sneak that past you sometimes, but many of you caught that. So if you have a couple of them, you can actually put those in as well. And you do have, with 73% of you already participating, you only have one last moment to jump in. And we've ended the poll now, and here are the results. We see that 64% of you are interested in opportunity zones because it's a greater opportunity of getting your project funded. 29%, Joe's going to like this. 29% is revitalizing a location, which is taking a location that is needs a little bit of rehab or a little bit of work. So 29%, also giving you access to investors. And then the last two will be in the tax benefits and potentially lowering your cost of capital. Okay, great. Okay, I've snuck in a third one today. Okay, so that's our opportunity zone function. But what you've told me is that opportunity zones are a funding option for your small business. So let's see what this has. What's your biggest barrier to funding? And that's funding your small business. Is it finding investors? Is it loan qualifications? Is it finding or understanding the programs that you need? Or is it projecting financial growth, your financial projections, doing the financial side of things to making it maybe a better application for you, or something else? Now, you only get one answer here. So, but it's your biggest barrier to funding. And is it finding the investor? Is it loan qualifications? Is it finding or understanding programs that fit your needs? Projecting financial growth? And we do have 72% of you. It looks like the same 72% that I think answered about every question. So, whoa, I jumped to 81%. So let's end the poll before we get too crazy here and share the results with you. And what you find is you find that 44% of you, it's finding understanding programs is your biggest barrier to funding. 44% of you, and also on the loan qualifications, 22%. So you might have issues qualifying for a loan, projecting financial growth and finding investors, ties at 17%. So all great information. Thank you so much for providing that for us. And let's move on. Okay, so our economic corner, which is going to be a little bit brief this week. As many of you know, that there is maybe a new Federal Reserve chair coming. The term for our former chair, Federal Reserve chair, is ending. And so Kevin Warsh is up for actually being nominated, and those hearings are going on. Now, I know you all know, because we've been through this, is that the Federal Reserve Chair doesn't set interest rates alone. It's a 12-person board, but it's that person guiding that particular board that's so important for small businesses because of the fact that interest rates are such a big issue for a lot of those that have some form of variable debt. So just on our abbreviated economic corner, we'll just say that those hearings are ongoing and we'll see how those particularly go. Now, not too many of you are concerned, I think, about the interest rates or the inflation rate in the United Kingdom, but hey, it rose to 3.3%, and it rose on higher gasoline cost. And I just wanted to throw a feel-good thing out there because, when they said it was raising because of gasoline cost, and gasoline cost in the UK are over $8 a gallon. When I go to fill my tank later today, I'm going to feel a lot better knowing that in not only the UK, but in Germany and France, gasoline costs over $8 a gallon. Don't get any ideas, California. So then next week, we'll be doing a more in-depth look on our economy. So let's move on to Capital Quarter. Capital Quarter is our weekly function. And we got our slide because of last year's big, beautiful bill. And when I looked at things, that is a big, beautiful bill there, isn't it? That $100,000 bill from 1934. That's worth about $2.5 million if you have one or find one anytime soon. So let's talk about opportunity zone funding with version 1.0. Today, we're going to be talking about 2.0. And we'll provide a case study here. And our case study is going to be kind of a small business opportunity zone deal from version one. And this is a pizza concept. So it's a pizza type restaurant. And in this particular scenario, what we saw a pizza entrepreneur who was looking to actually expand and to acquire the real estate in this particular deal. Opportunity zones don't have to be real estate. It can be stock from the investor. So this project is a $900,000 project. The timeline, and I really like this because they gave themselves a lot of time to make this happen. A lot of these projects don't happen that quickly. And it was happened over a 12 to 24 month period with the intent to later on to scale or increase outlets or to refinance that. So in looking at this, almost with all types of funding, we're going to have to come in with some type of equity, with some kind of skin in the game. Typically around 10 to 20% is typical. It could be less, it could be more. So in this case, it is a little bit less, being 100,000. It is, a little over around 9%, almost 10% actually. So we come in at the 10% range in this particular case. Through the opportunity zone, the investor produces $400,000. And so this investor contributes his eligible capital gains that I'll let Joe explain the eligibility on. And all of a sudden you have an investment in there of 400,000. Now that can be investment in debt. It can be investment in more equity toward that particular business. It's between you and your investor. When you get into the next section, because in this model that we're showing, that it also continues with an SBA loan. And in this case, it would likely be an SBA 7A loan for maybe some tenant improvements, some equipment or build out. The key thing here is that you're stacking this debt, you're stacking these and leveraging what you have with your $100,000 to produce other layers of funding that can actually fund your project in whole. So we get to the point to where there's 300,000. One thing that's going to be interesting though is because if your opportunity zone investor wants equity, he wants shares of ownership in your pizza parlor. If he owns over 20%, he's going to have to personally guarantee that loan. A little bit of a nuance, a little bit of a special aspect, but something to always keep in mind when dealing with an investor. Also, you have a portion, and in this portion, we got either local incentives or we got the landlord to do some tenant improvement grants, of which they certainly used to do. A little harder to find these days, but if they see a good project in there, and they could do some TIs, but also there's some incentives. We had some facade grants that went through, some fee waivers, other ways to form that. There's kind of a vertical thing. The thing I like about the vertical showing of this is it shows our weighted average cost of capital at the bottom. So you see that at the bottom. So in this particular case, it's not one layer. It's not one person writing that particular check. It's a whole solution, and it's a solution of multiple projects and multiple funding sources that can go into it. We know about this well at the SBDC, so don't be afraid to align us. But these projects are going to combine equity, they're going to combine debt, they're going to potentially have incentives, and the success looks like the alignment plus the structure. And why does that success work? It's because we have investors that have tax advantage upside in this particular project. They also like to be able to make an impact in a particular community. So that's the gains from the investor, be able to use those capital gains in a favorable way for the community and potentially for their business by cutting their tax bill. For the owner of the business, it provides more capital and flexibility. So you have that flexibility and also potential feasibility, whereas maybe before this project didn't work. And whereas a lot of people don't like the word leverage, I still love it, sorry. It really provides a certain leverage factor that allows you to take the 10% that you have and come up with 90% to complete that deal. And that ends up being a stronger financial approach to the solution. Now, when these projects don't work and they fall apart, it's often because there is no clear exit strategy. Your investor is going to want out of this deal eventually, and they're going to want to see how they can get their proven return and how they can get out of this transaction. They do not want to buy and hold business that you're going to operate for 30 years. Those are going to be hard to fund under this particular program. But if you have a way to where you can identify an exit strategy to where you sell or somehow take the investor out, he's going to want to see that at the beginning of the project, he or she. Also, weak projections could be a particular issue. If you don't have well thought out, conclusive financial projections, that is going to be an issue. These deals fall apart because you don't meet those investor expectations right up early. We got to meet those expectations from for the investor to contribute their funds to this. And then also inexperienced operators are potentially a problem, along with sometimes the expectations are misaligned. So oftentimes there'll be better funding or alternative funding that's available. A strategic equity partner, we talked about strategic partnering. And when a strategic partner is coming in with equity, that's something for another webinar, but also it's a very viable way of having somebody who mutually benefits from what you do in this type of a transaction. We have revenue financing, revenue-based financing, whereas if you have revenue and you have profitability in there, we have accounts receivable funding and some good sources. It's something that scares a lot of people, but oftentimes revenue-based financing is a good way to go. SBA funding, we talk about fairly frequently. Ownership partnerships, me, not a big fan of partnerships, but other people are, and it's as long as it's an option and you know what you're getting into when you get into it, I'll talk to you about it. And then there's another ton of alternatives. There's a ton of opportunities to fund your business. One that's we don't talk about, or we try to talk about more, we try to use more, is to crowdfund to get leverage and stack more of these particular options. So when you see success for a project like this, you're combining oftentimes multiple funding sources. You're building those relationships early. You've got to know your numbers. You've got to understand your numbers. Even if you come to the SBDC and we work with you on putting your numbers together, you still need to learn them. You still got to be able to recite them to investors, to lenders, and to other potential partnerships that you have. And you've got to give yourself a timeline that's healthy, a timeline that takes time in order to get this particular deal done, and use your advisors. Last time I heard, the cost for a good quality SBDC advisor to the small business in the small business community was free. Okay, they're not getting paid free, by the way. AI solutions in 2026, our AI team, and here we've swapped out a beautiful, look at this wonderful photo that we put in of our team of staff, our Webinar Wednesday resident economist, our webinar producer, and then our interns that are working and doing some fantastic stuff with small businesses. Really, there's going to come a time when I'm going to quit promoting this because we're going to be beyond capacity. But if you would like to learn more about how AI can help your particular business and also how it can help, particularly, well, your business, this is pretty much it. You need to contact us. We are one of these states that are engaged in student engagement projects and you've seen our wonderful team now and our senior financial advisor, Mr. Jay Thompson there. We have other SBDC tools that can assist you. And some of our other tools, such as Live Plan to help you build a better business plan. We have Vertical IQ that actually, and both of these are right here as I move along quickly. Our YouTube channel, our CSUB YouTube channel, where our webinars end up. Oftentimes, all you need to do is subscribe and be notified when this webinar is ready for you. So our YouTube channel, we're now up to 523 subscribers, which I like to say is great for us because we're not a YouTube influencer. If we were a YouTube influencer, I'd be looking a little thinner right now. So our Vertical IQ is great assistance on industry data. Know your numbers. Vertical IQ can tell you how you compare with your industry. You need to know those numbers. Again, our wonderful partners, our wonderful sponsors that allow us to be here today, going all the way from the County of Kern to CSU Bakersfield's BPA, and everybody in between. Thanks all. And also, please reach out, contact us for confidential, I repeat, confidential, no cost obligation expert consulting. You can sign up on our website, it's right there. We'll sign and align the best consultation for you and get your business to be all that it can be. And that brings me to today's special guest. And our special guest is Joseph Arreola, who's a senior budget finance and policy analyst over economic development, a department that we love, with the County of Kern. Joe began work at the county as an intern in budget and finance. He later advanced to fiscal and policy analyst and then on to his current position. He's a graduate. He's a runner. That's right, people. He's a runner. Let's get used to it. He's got the same degree I have from a CSU, maybe a little bit different campus, but a CSU BS in business administration finance. What a great degree that has turned out to be. And Joe presently is a member of the Kern County Management Council and the Government Finance Officers Association. Joe, it's great to have you here in studio today. Cruise in here and let's let you take it away.
It's good to be here, Kelly. Thanks for inviting me. So thank you, folks, for joining. Today, we're going to be talking about opportunity zones, and specifically Opportunity Zones 2.0, which begin in 2027 and go through 2038. My name is, as Kelly mentioned, is Joe Arriola. I'm an analyst with the Kern County Administrative Office within our Economic Development Division. Economic development, our stated goal is to make Kern County the best place to start and grow a business in California. We are housed underneath the County Administrative Officer directly, and so we have touch points with just about every county department within Kern, and we assist our departments and we assist the public in any kind of economic growth, business starts within the region. So what are opportunity zones? Opportunity zones began in 2018, first established in 2017, and they offer tax deferrals, tax reductions, or tax elimination on reinvested capital gains. Those reinvested capital gains have to take place within specific zones, adopted again originally in 2018. And my role here is to help develop those zones going forward for 2027 and on. So in order to be eligible for this benefit, you have to reinvest your capital gains within 180 days of realization. This is not a tax break for status quo operations. This is not funding from the government. However, if you do reinvest those capital gains and you make a substantial improvement to a property, 50% for a rural zone, I should say 50% on the base value of the property for a rural zone, or 100% on an urban zone within 30 months, that investment is now eligible under opportunity zones. You can then defer your tax liability, your capital gains tax liability for 5 years. You can reduce that tax liability through a step up in basis after that 5 years. And then if you remain invested for 10 years, you can exit that investment free of federal capital gains tax. The zones themselves target low income and high poverty census tracts. Each state is limited to 25% of all eligible tracts. That is approximately 25,000 tracts nationwide, including U.S. territories. For the County of Kern, we have approximately 101 eligible census tracts. That eligibility is determined by the Census Bureau and the federal government, passed on to us. And the state is asking us to identify our most attractive, our most competitive census tracts. Because the state is limited to 25% of eligible tracts, we are limiting ourselves to nominating approximately 25% of our tracts. That leaves us with about 25 or 26 to submit to the state. I mentioned eligibility. for these tracts. How is this determined? Every zone within California, every zone within Kern County is part of a census tract, but those eligible census tracts fall below a median family income of 70% of the MSA. My apologies. MSA is the Bakersfield Delano metropolitan area. For our purposes, it's the borders of Kern. It's all of Kern County. They're looking at the median family income from Kern. A census tract falling below 70% of that is eligible. The other criteria in which a tract can be eligible is if they fall above 20%, at or above 20% of the poverty rate for the region, and below 125% of that median family income. So there's two ways of qualifying: below 70% of median family income, or if you are below 125% of the median family income and have a poverty rate of 20% or higher, you are eligible. Currently, under Opportunity Zones 1.0, the county has 35 tracts. Earlier, I mentioned we have 101 eligible tracts, and 25 will likely be selected. Between Opportunity Zones 1.0 and 2.0, they tightened the restrictions on eligibility. That median family income used to be 80%. And so we are looking at regions that are that have lower incomes for Opportunity Zones 2.0, and that's where investments will be targeted. And then again, investments must meet specific timelines: 180-day period to reinvest those recognized capital gains, and a 90-month period to make improvements, substantial improvements. In rural zones, 50%, in urban zones, 100% of the base value. So a few more differences between 1.0 and 2.0. The county will have fewer zones eligible and fewer zones that we will then be able to nominate to the state for selection and nomination to the federal government. However, the benefits are improved with those few zones. So in 1.0, you did have the deferral elimination of federal capital gains tax. And that was based on a tier system with specific investment dates. There was a 5-year, a 7-year, or a 10-year period. With 2.0, rather than meeting specific dates, it's a rolling 5-year period. So that 5 years begins from the date of investment, and that 10 years begins that date of investment. It's rolling, it's ongoing. The step up in basis is similar, but somewhat different. And this is the way that at that 5-year mark, you are able to reduce your tax liability. So for 1.0, you received a 10% step up in basis after 5 years, and then an additional 5% after 7 years. For 2.0, it's simplified. For an urban zone, you get a 10% step up in basis after that 5 years. In a rural zone, a 30% step up in basis. And so this program continues to incentivize investment within urban zones, but really is making notable improvements for rural zones. The majority of Kern County is rural, and so we anticipate benefits from that. And again, those changes are that 30% step up in basis for rural and the 50% improvement of the property for rural zones. Additionally, there's improvements with transparency. In 1.0, there was reporting at an opportunity zone fund level, and that was helpful. However, reporting at a project level was largely voluntary. With 2.0, we're going to be seeing improved reporting at that level. It will include housing units, it'll include jobs created, and it'll include federal reviews in years 6 and 11 that we can then use for Opportunity Zones 3.0 in 10 years. And so the approach for opportunity zones, this graph here on the right shows that there has been some improvements. I believe this is housing units created per zone. That dark line there, the dark solid black line, is zones that were selected, where the dotted line is zones that were not selected. You see an increase in both for housing units. However, after opportunity zones were realized in about 2019, what you saw was that the dark black line, those zones that were selected, very quickly outpaced that number. And we're using housing units created because all of the data we have thus far is suggests that the majority of funding went towards multifamily developments. So the intention here is to motivate private investment in less advantaged regions, looking for impact within distressed communities. The intention also is to combat Nash equilibrium. What Nash equilibrium is essentially investors are not investing within a region because other investors are not investing within a region. That could go for sectors or even business types as well. This provides just a tweak on that equation in order to incentivize them into these investments. There's two different types of investments. There's opportunity zone funds. Kelly mentioned that with the pizza parlor. An opportunity zone fund must maintain 90% of its assets in opportunity zones. And there's direct investment. If you are an investor or if you know an investor and they are looking to invest in a single project, a single multifamily owned development, a single pizza parlor, that is a direct investment. However, opportunity zone funds are also an option. And so what is the county's role in Opportunity Zones 2.0? Well, just as project success is alignment and structure meeting one another, the success of opportunity zones in general and this development process is the same. The county will be submitting on behalf of all of our regions. Kern County will be submitting on behalf of all of our regions to the state. The state will then consider our submission, evaluate that submission, and submit their final zones as the ultimate arbitrator for the state to the federal government for adoption. And so we are looking to balance both need and opportunity through geographic equity, but really targeting where the most advantage for investors is, the most attractive zones, so that we remain competitive against all other submissions within the state. This is a feedback-oriented process. We've been meeting with communities through the county thus far. We will continue to meet with communities through the county. I will be in Arvin next week, next Wednesday. I'm happy to meet and talk with anyone there, and we'll be hosting future webinars as well. This is going to be a data-driven, action-oriented process. We will be looking at needed cases for opportunity zones, but also likely use cases. Through that data-driven, action-oriented process, we're looking at zones that have reduced barriers to development. This is a 10-year horizon on this project. And so we are broadly looking towards zones that have zoning alignment already, that have infill available, and that have anchor assets, such as airports. And then again, this is strategy informed, and I'm going to be getting into that in just a moment. We've met with the state. They have some development framework. This is largely how they will be reviewing our submission. They are looking for census tract alignment with local strategy and regional strategy. And this is what I mean by strategy informed. The county has a SEDS through the Kern Coalition. If you are located within a city, each individual city may have a SEDS as well. We are looking for areas in which the county SEDS, the city SEDS, the state SEDS is Comprehensive Economic Development Strategy, my apologies, have alignment. So some of those regions in which we have alignment, and this is rather broad, so we have a lot to pick from, but within the California blueprint, within the county zone economic development strategy, we have aerospace and defense, advanced energy, natural resources, key strength of the county, healthcare services, transportation and logistics, advanced manufacturing, value-added agriculture, ag tech, carbon management, and tourism. The state also is going to be looking at and evaluating place-based incentive areas. And so as we develop our submission for each one of these zones, we are looking to layer each one of these factors on top of one another to put forward the most competitive submission. And it will be by zone, and the state will be evaluating by zone. So some of those place-based incentives areas include business improvement districts, transportation improvement districts. Kern County is not home to either one of those. However, we do have an Economic Development Association certified comprehensive economic development strategy. If a city also has one of those, we invite submission and development around their own. Important for cities and important for the county is finding zones where public investments meet public incentives and private investments as well. In other words, the county has Advanced Kern. Advanced Kern is an incentive program that offers property tax rebates on job creation and investments within the county. A few examples of which include a building developer within the Lebec area. It includes the Mojave Steel Plant, Pacific Steel Group, out in East Kern. What we are looking for, Amazon also, what we are looking for within these is job creation that exceeds the living wage for the region. This type of incentive is important to communicating the public's investment within economic development and makes our submission more competitive. The state will also be looking at housing. It's no secret that the state's priority is to develop more housing. They have a tremendous need to develop housing statewide. And so the regional housing needs allocation plan and each city's housing element will be important to consider. A few unknowns for our own development. The Census Bureau's response to margin of error. You can find a interactive map for opportunity zones under Novogradac. Novogradac is providing opportunity zone services, and in that they have developed a map of each eligible area. The county is also working on developing a public map where you can layer on zoning and other factors that would be important for investment or investment planning. Each one of these zones, however, and the Census Bureau's determination of eligibility has a margin of error. In some cases, that margin of error is pretty great. Novogradac and some local jurisdictions have reached out to the federal government asking them to consider this margin of error within their own development and determination of eligibility. However, we are moving on at this point with developing the map we have and that has been determined as eligible. Should additional zones be deemed eligible, we will also consider those, but this is the best available information we have from the Census Bureau. And again, that map can be found through Novogradac right now, and we will be producing a GIS layer. Lastly, the state allocation of census tracts. The state is limited to 25% of eligible zones statewide. However, counties are not necessarily limited to 25% of zones. There are some counties that have fewer than 4 eligible zones. They will, if they nominate, be above that 25% mark. And we do not know, this state has not confirmed how they will be allocating zones statewide. And so it's incumbent upon us to make sure our submissions are as competitive as possible. And in that effort, we have been meeting with our cities for any data they would have to support. And for this group here, for small development or small business development, I would ask for the community to submit any information they have, anything that would be helpful for the selection of Kern County zones. And so I have a few questions for the community as we develop this. What industries, use cases, or types of communities should the state prioritize? What developments are incentivized throughout the state? And then what barriers are being reduced for that development? Which tracts are primed for revitalization but underinvested? What tracts are zoned for development? What assets, anchors, and infrastructure exist? What tracts are forfeit? That's worth considering. Through many conversations we've had, there are tracts that appear to be very attractive for nomination, but when you drill into the details, they may be poor fits. You may have individuals who are not willing or interested in changing their operations. And lastly, what census tracts have strong development potential and opportunities that might be missed in official data? So what does the county want to know as we go forward in nominating this to the state? Forgive me if this is a bit repetitive. However, the county is looking for eligible neighborhoods and business centers that are best positioned to capitalize on investment. We're looking at priority areas for revitalization. We're looking at anchor assets. We're searching for tipping point investments, incentives for investment, I should say. So if you are working on a project or you know someone who's working on a project and they need that last mile, this is a potential incentive that may get them there. We're looking for alignment with state, regional, and local priorities. I call out the California Blueprint again. The California Blueprint is the state's economic development priorities. The state will be reviewing it. It's worth keeping that in mind. And then projects in pipeline. Is there anything moving through processes at the city level, at the county level, that may be eligible for this incentive once they are through that? And then lastly, local data and support, housing demand data, infrastructure need, infrastructure assets, and community priorities. I welcome any input. In terms of next steps, the county will be identifying eligible tracts and nominating local zones. We are requesting submission from cities by mid-May. I would request if you have any input, please provide that to the county by mid-May. My email is down there below. We're expecting to nominate approximately 25 zones across the county. We will be submitting our map and our zones to the state in June 2026. And then the federal government will redesignate sometime in October 2026. These maps will be effective January 2027 and will run through December 2036. I mentioned we're going to have fewer zones. I also mentioned that the eligibility has changed from Opportunity Zones 1.0 to 2.0. What that is going to mean is that some of these zones that are currently selected will not be selected in Opportunity Zones 2.0. However, it doesn't mean that that opportunity is lost. Opportunity Zone 1.0 and those tracts will continue to remain in effect through December 31st, 2028. During which time, both maps will be in effect, and investors will be able to select whether they're taking part in Opportunity Zones 1.0 and 2.0. For those tracts that are not selected for 2.0, but have been selected and adopted for 1.0, it also means you may still invest within those through December 31st, 2028, and take advantage of this opportunity. And so I ask that you submit feedback and recommendations to me. My email is down there below, arriolaj@kerncounty.com. And I welcome any questions or comments that you have.
Fantastic stuff. I just love that we have more opportunities for businesses to be funded. And this is one, although it's not going to happen tomorrow, it is one definitely going to happen. So for those of you that have questions, now is a great time to go into our Q&A box. Pop a question in there for Joe about the 25 zones or anything about what you've heard in the last good part of an hour. And we'll take those particular questions. Let's first jump into our chat box to see what Maureen has in the chat box. Make sure there's no questions there. Again, great time to ask questions right now. Oh, some wonderful greetings and salutations. That's always good to see. Glad to see everybody doing so well. So we have in there the SBDC on how to sign up for SBDC services is there. Then we have a question. So we'll get to the question in just a sec. Well, let's go to the question now. That's what we're looking for. So the question is, are there local partners, organizations, or contacts that I can connect with with purpose for opportunity zone funding. What types of investors or funding programs are currently active in Kern zones? Joe, I'll give you first shot at that.
So I'll take the second question first. What types of investors or funding programs are currently active in Kern County Opportunity Zones? There are sites you can visit, like opportunityzones.com, that have projects that are looking for funding right now. I believe they also offer services to those searching for funding. That may allow you to see some of those projects. However, I hit on that transparency piece. Transparency for Opportunity Zones 1.0 was quite limited for government officials. To date, we do not have the full breadth of what has been started with Opportunity Zones or has been invested in Opportunity Zones. I have suspicions largely based on region, area, and the project. But with 2.0 going forward, we'll have improved transparency. We will have project level data, and that will be available to us for development of 3.0. I think the first question, however, was searching for funding. And Kelly, I think you may be a better contact for that.
Well, it's always hard to, and we didn't really do a good job of connecting because of the pandemic, mostly. We had actually an Opportunity Zone webinar as our last webinar before the pandemic hit in 2020. So that goes back to February of 2020. But really, I think this time around, what we would like to do is we would like to have more purposes, more webinars, and really guide those investors that really want to participate in the program and provide them information and really kind of provide maybe even a clearinghouse that's going to be available to where they could see what projects are out there that want to be funded and kind of an opportunity to look. I think the technology is going to be there, and I think it's going to be a lot easier to do in 2026 than it would have been to do in 2020. So whereas I think we're a little early for that right now, I think that is really something that I think that really could be improved upon is having that investor list if anybody wants on an investor list, or better yet, maybe vetting investors that are interested in projects and letting them see projects that we have or are hosting here at the SBDC or other resources. Okay, so continuing to go through our particular chat box. You see our YouTube channel. There's the opportunity to jump into the YouTube channel on AI projects. Can't tell you what you're missing out on if you're not jumping on that one. We see, okay, here's a question. Do you have some examples of anchor assets?
Yeah, that's a good question. So anchor assets include access to freeways, highways, airport proximity, rail access. We have zones within Kern that have industrial zoning directly adjacent to and with access to rail, to freight rail. That's a tremendous asset for any development of an industrial project within especially rural zones. I mention that because we've seen with Opportunity Zones 1.0, that's where a lot of funding went in terms of rural. Anchor assets may even include anchor tenants. If there is a tenant within the region that a city in particular would like to call out as someone investing in the community, that makes a zone more competitive as well.
Great. Okay, so next question is, can you show a map? Well, I don't have a map pulled up, but I imagine what you're asking for are the census tracts, maybe the 100 census tracts that are available in Kern County. Do you have any resources like that? Because we could always include that, because after our webinar, you will be getting an email. You'll be getting a replay of what we're talking right now. And you'll also get some of the resources that are available from Maureen in just a matter of days. Is there an overall census map or anything, or is there a good resource? Or better yet, how about a link?
Yeah, so if you go to the Governor's Office of Business Development, GoBiz, they have a page for opportunity zones. In there, they link to that map from Novogradac, or you can search through Google or your preferred search engine for the Novogradac Opportunity Zones 2.0 eligibility map. That is updated with the latest data. And then we are working with our GIS team right now to develop a map that I will send out to Kelly to forward on to this group.
Great. Next question. To clarify, you have to buy, develop real estate to realize opportunity zone tax benefits, not just open a business or pizza parlor, correct? Well, my understanding, and I haven't looked at this in a while, and then I'll let Joe finish it up, is that if the business is located in one of these opportunity zones, one of these 25 opportunity zones, investors can take their capital gains and they can invest in that particular business. And I use a low-tech business to let everybody knows, like a pizza parlor. But at the SBDC, we see a number of different tech businesses. And so if you have maybe a tech business that locates in that particular zone, then there is an opportunity to invest in the business, and it doesn't have to be exactly real estate driven, although the purpose behind the opportunity zones is to improve disadvantaged businesses, communities, and so forth.
Yeah, it has to be the reinvestment of recognized capital gains within 180 days and that substantial improvement within 90 months. I don't believe, although I would advise you to speak to a tax advisor, I don't believe it requires the purchase of a new property. It could be a property that's already owned, so long as you were reinvesting capital gains and improving it.
Thank you for that answer, Joe. Couple of other things. We got, hey, hello, I'm Brian. Brian, how you doing? You're with BHC, one of the Kern Coalition conveners for the California Jobs First Initiative. And as a matter of fact, I believe you awarded about 16 projects toward the end of last year, promoting economic development across the County of Kern, aligned with the California Blueprint. And Brian would be happy to learn more about opportunity zones and help several of the awardees or others in that last mile phase. So there's an offer.
Yeah. Reach out, Brian. Happy to connect.
Absolutely, Brian. Thank you. Okay, that wraps up our questions in the chat particular box. Let's jump over here and see what we have in the Q&A box. And we do have a question here. And it's, I've met with landowners regarding potential projects and opportunity zones, but they would like community feedback on what type of projects would work best. Can the county help in conducting surveys or meetings in the community to determine which projects are most needed?
Yeah, thank you, Marisol. I would be happy to connect with anyone regarding development. I would say broadly, any adopted plan from our planning department would probably be the best first source to go to. In terms of community need, we've been going around gathering information for Opportunity Zones 2.0, and we continue to work. I think I saw a question in the chat regarding economic development partners. The Small Business Development Center would be one of those. Kern EDC, B3K. Yeah, we would be happy to coordinate with all of our partners on that.
Oh yeah, we love ways to fund businesses, so yeah, bring it on. Okay, looking through our chat, our Q&A box, I don't see any questions left. Joe, any final comments?
Just that I invite any information that the group or chat may have. Please reach out, connect. I'm looking forward to development of this plan, but development of the plan is just the first step. We can identify zones, and that's great. However, they won't mean much unless we really capitalize on them. So we're just getting started. We'll have the next 10 years to work on this, but I don't want to wait 10 years. So yeah, reach out. Happy to help in any way.
Well, maybe Joe will have the next 10 years to work on this. Well, I'm really excited because it's really nice to see the county taking a specific lead on this particular project and moving forward. And I think it opens up a lot of avenues for development. Some of it in housing, some of it's going to be in other forms, but I think with the business side of things and the small business side of things, and our small businesses are defined by businesses 500 employees or less, although we see smaller ones. So, there's a lot of opportunity that I think is coming. I think what we need is we will have a continued effort in this. We'll continue to stay in touch. We'll continue to have Joe back as this progresses and we get actual money on the ground. So stay tuned, everybody. There's a lot more to come on this. There's a lot of other ways to fund in the meantime, so give us a call. Okay, that's going to wrap us up for Webinar Wednesday number 377. This just in. We'll be back for webinar number 378 next Wednesday. So for my special guest, Joe Arreola, I'm Kelly Bearden, and we will be back next week. We will see you then. Everybody have a great week. Bye-bye, everyone.